So today, Logan and I wanted to talk about loans, and because they're big part of investing. And I know for myself, when I first started investing in real estate, initially it was residential, and I would qualify for the loan. More precisely, my annual income would qualify me for the loan, and I didn't quite qualify for much. I remember it was a fourplex, and later on the different kinds of loans I've been exposed to were private loans, and then that's a bit different from the bank. It can be a little less conservative in the underwriting, and and then chronologically, I had a few of those, and then went back to the bank with some experience as an investor and a bit more credibility, a bit more concepts and knowledge of investing. And I went then to the commercial arm of the financial institution, and then the approach was substantially different. We would be looking at the asset and the net operating income, and how much income was generated by the asset, and if this income would cover the expenses, obviously, and also the debt. And yeah, so these are some initial thoughts about loans. Do you have what are your thoughts, Logan?
Yeah, absolutely. So yeah, again, initially when you are in the residential space, you're going to be dealing with your own personal, initially if we're talking about someone just starting out, and again, if you're just starting out and you don't have a residential property and you want to go after a commercial property, a small retail space or an small office building, they may still look at you. Talk to your local lender, but they may still look at you and your personal, your personal credit score. They're going to look at your income. They're going to look at things like that. When you start to get into a little bit bigger properties that are themselves operating as a business, they're going to look at that business and the net operating income and how much debt service coverage ratio is, how much money is left over to pay the bank. Different banks are different lending institutions are different private equity companies are different. So yeah, traditionally, if you're looking at the different places to get loans, your regular commercial bank can supply loans. Private equity companies, a lot of these funds or private equity companies that are raising equity also offer loans. So they may partner on deals, they may go buy their own deals, or they may loan money at a specific rate of return. So that's another area to go after loans, and those will all have their own underwriting. As Aurelian said, when you get into private money, it becomes it's probably a little bit more relaxed than when you're dealing with just a commercial lender. Credit unions are a great place. I love dealing with credit unions, especially if you can get with a small bank or a small credit union that's local. They tend to offer a lot more flexibility in what they can do, but it tends to build a personal relationship. You can build a lot better personal relationships. I've had several scenarios in my investing career and business career where dealing with local banks or local credit unions, and the deal may not have made sense on paper, and they've said, we know that you're going to pay us back. We know that. So the banks, and it's a small bank, and there's a board of directors of that bank that say, yeah, we know this person, we know that person. We're going to work with them because we know they'll pay us back. We don't like the deal, but we know them, we know it's going to work, so once you start to build that rapport with the bank, and that also has to do with your assets and what you already have. If you didn't have anything in the bank, you had no money in the bank, no assets, they're probably not going to do that just based on you. But once you start to build that rapport, it becomes much easier to get money from various different sources. So yeah, as far as loans go, if you're thinking about getting a loan and you need to get a loan, the best possible thing you can do is pick up the phone, call as many different lending institutions, private equity companies, credit unions as you possibly can. Talk to wealthy individuals who have bought property already, find out where they're getting loans, talk to them about the process, how they got from where they are to now, and what all the loans look like in that sequence, if they'll share that information with you. But yeah, just pick up the phone, understand, because it can be, and Aurelian, you've probably dealt with this as well, even from commercial lending institution to commercial lending institution, things can vary widely, in terms of what the rates, in terms of how their appetite for certain types of investment, so on and so forth.
Yeah, absolutely. And yeah, and there are different kinds of loans, and you know, when you don't have a track record, it can get tricky initially. So you may want to partner with other people that
True.
have a track record. And if you have identified a niche, or you have an idea of business, or a specific strategy, you know, that you think would work well, then try to partner with somebody and lean on their experience. And then the financial institution is going to look at their experience as well on top of the strategy. And if that makes sense, then they will fund the deal.
Absolutely. Yeah, we did that with a business that we bought. My partners and I back in 2015 bought a manufacturing company. For those of you who don't know the story, we ran it for about 5 years, sold the business, still have the building. It's 33,000 square foot facility up in Wheeling, West Virginia. But you know, my partner and I were both in our 20s, late 20s. Did not have the credit to buy the business. Partnered with someone who did, and we all three signed on the loan. And you know, that was how we got it done. So that's a very viable option, is to bring somebody else in who can sign on that loan. You know, if you're syndicating, you've probably heard this out there. If you're syndicating a deal, you know, you need the sponsor. So the sponsor might sign personally for the loan. If you don't have the clout to do so, you may have to bring someone on board who does have the clout to do so. You know, there's personal, you know, you can have personal guarantees in a loan. When you get to a certain level, you can have non-recourse loans, where, you know, the bank's basically using the building and that's it as the collateral. You know, it depends a lot on your track record. It depends a lot on the bank itself. Talk to the different banks, but I've spoken to a few who have expressed that they're one of the factors they take into consideration how much money is put down. You know, once you get in, if you have a tenant that's going to be a 10-year lease and you're willing to put 30 or 35% down, you can start to get into the non-recourse loans at their institution. And that's probably going to change depending on lender to lender. But yeah, you could have a personal guarantee that you have to sign or not, depending on the deal you're doing.
Yeah, and the other type of loan I wanted to mention is bridge loans, and particularly when you buy an asset that's gonna require some repositioning, you can get bridge loan, and you know, the payments could be interest only for a while until you reposition the asset, and then the strategy is to refinance and get out of this bridge loan. And but they exist, and they're a good way to get into property, into investing.
Absolutely, absolutely. Yeah. So just to piggyback on that, I did some flipping in a previous life, flipped a few properties, and one of the offerings that the bank had offered was that essentially it's very similar to a hard money loan, but it would be, you know, they're going to offer the rehab costs plus the purchase price, and you have to come in at 25%. The other 75% is interest only during the carry period, and then you can refi, as you said, on the back end, or sell it. It was one of the offerings that they offered. So similar things happen on a larger scale with larger commercial properties. So yeah, good point.
Yeah, and yeah, so hopefully you found this episode interesting, and thank you for tuning in, Logan. Thank you
Yeah,
as always.
thank you. Absolutely. Yeah. Take care, everybody, and go call your lenders, call your people. That's the best thing to do. Get on the phone.
Yeah.